But let's get chatting with the next corporate then on the show. We have Mr. Rahul Gautam, who's the Managing Director of Sheela Foam, is joining in to fill us in with the outlook for the business. Hi, sir. Good morning. Thanks so much for joining in. Well, the last time you joined us, you said that demand is a little bit sketchy on ground. Could you give us an update? Have things recovered? Is demand bouncing back now, or are things a little bit subdued?
So if I look at the last couple of weeks, definitely demand has increased, and at least the trend and the direction is upwards. So compared to the last time that we met, this is a little bit of a better situation than that.
Okay. So, you all are very closely linked to TDI prices. Obviously, it's one of your key raw materials. As of Q3 FY23, it stood at around 243 rupees per kg, which was lower than what at least we have data for in Q2 of FY23. Where do prices stand as of now? How have they moved? Has there been any kind of rise? And if you could quantify it for us?
Yes. So it is absolutely true that our destiny is completely linked to TDI prices at the moment. Fortunately, the prices are down. They have been oscillating. But if I look at the prices right now, they are off the level of about 220 rupees. So there is a drop from the last numbers that you said. And I hope that this trend continues or at least stabilizes at this level.
That's actually a significant reduction. 220 rupees per kg compares to 243 rupees per kg. And maybe, it's probably the lowest that we've seen since Q4 of FY22. And correct me if I'm wrong. What does that do to your margins?
So eventually it will add or increase our margins. But, the various segments of products that we deal in, one are the B2B products where, of course, the selling price is linked to the raw material prices. Of course, a little back and forth on that. The other is the bedding side of the business, where the contribution of TDI to the cost of goods is much lower, and therefore it's a kind of a mixed bag. But there is always a little lag between the impact of these drop on the margin. It will be positive impacted.
All right, Mr. Gautam, there are reports that indicate maybe Sheela Foam is looking at inorganic growth. Would you like to clarify? Namely, the report mentions that you're looking to buy furniture rental company, Furlenco. Any truth out there?
So intending to look and explore, there is total truth in that. However, we are far away from anything on the ground happening, but the process of evaluation is absolutely on.
So you're definitely interested in this asset, the furniture rental company, Furlenco.
Correct. So that helps us to make our little foray into the furniture side of the business, where a lot of our input goes into it. And it's a very fragmented market, so it'll be a small process of entry into that one.
By when will you take a decision on this asset?
I should say in about 2 months' time or so. One should have a clearer picture as to where we stand.
What is the status of your balance sheet, cash, debt on books, and how much are you willing to shell out for an acquisition?
And so fortunately, we're reasonably healthy. There would be enough cash, almost, I may not know the exact numbers, but something like 750, 800 crores would be there on there. And the debt is relatively negligible. Of course, some places it does exist. If we include our outside subsidiaries of Australia and Europe too, some small quantities may be existing, but that is for those subsidiaries to take care of. And therefore, we're okay.
But what is the size that you're looking in terms of an acquisition? How much are you ready to let go of in terms of cash and books?
Look, it completely depends on the acquisition and where it kind of ends. But if we were the one that you talked just now about, I don't think we need to borrow from anywhere.
Okay, so what could be the ballpark size of it? If you could give us just a rough range. We know the target
it is still in very nascent stage, and therefore these numbers also keep changing and around.
Okay,
and in fact,
what kind?
it is also a business where there is a PE fund involved. There are also fragmented shareholders who are existing. So we're just trying to put all that together and to see that how can we make an entry.
Would it be 500 crores plus?
No, much lesser.
Okay.
What kind of, I mean, is the business profitable that we're talking about for Linko? Is it profitable as of now? What kind of revenues do they do? We don't have those numbers of hand, so I just thought I'll ask you.
Correct. So on an operating it is profitable. However, the loss is mostly happening on the financial side, and that once that corrected, will get straight away into profit.
Okay, and what kind of revenues did they do roughly?
So at the moment, that's a rental company, so of the order of about 200 crores a year. But the potential, I mean, look, that's not happening, or that's not growing because they don't have enough assets to lease out. The moment we get involved in it, that number could easily go up to about 400.
Okay, we'll let you do your due diligence and come to a decision on whether or not you'll go ahead with this particular acquisition. Just wanted to ask you a little bit about your two new brands which you've launched as well, which would probably be, between the range of 4,000 to around 9,000 rupees, which is Feather Foam and Starlight. What are the volumes that you're doing on these two brands? How much are you planning to probably scale it up by?
So these brands are primarily for supplying to the MBOs. As you would know, that all our sleeper products are completely with the EBOs. And however, there are a large number of MBOs which we need to address. So we've introduced that a couple of years back. It's growing on a steady basis, but it's completely dependent on the geographies or the number of MBOs that we go after. But it has a higher growth because the base is small and the universe is much larger.
Okay, all right. Final question then before we let you go, Mr. Gautam. This year, I think you're going to be ending with mid-single-digit growth. For the coming year, that's for FY24, given that the international business, the Australia business in particular, is going to grow in double digits. The consolidated entity, what kind of a revenue growth are you looking at without this inorganic growth? And also, what is the rough margin band we should be working with?
You're asking me to hazard a guess, but I would say what we would plan for, and as the situation stands today, we should be looking for a growth of anything close to 12, 13, 14%. And the margins should also be of similar levels, EBITDA margins of 13, 14%.
Okay, all right. Thanks so much, Mr. Gautam, for stopping by. We look forward to chatting up with you because we'll be interested to know how that inorganic growth is going to pan out. But we've got your intention as of now, and we'll wait for further update on that. Pleasure talking to you as always.
Thanks,
for the time being.